That word inflation hasn't entered a discussion on television for probably 5 years, 6 years, and all of a sudden we got that hot read last month, and it got everybody concerned, thinking, hey, maybe the Fed truly is behind the curve, maybe inflation is peaking its head. The number that came out today basically confirmed the fact that the spring in the U.S. the number was basically just a bunch of noise, and I think we're a long way away from having runaway inflation here in the U.S.
So really firming up what Janet Yellen was talking about last week, saying that inflation is not on the agenda, that this whole fighting unemployment with Fed policy will continue for now.
Yeah, exactly. I mean, they have a dual mandate, and one of them, and the most important one to them right now, is jobs. I mean, that's the thing where we're really struggling here in the U.S. I mean, it is true that the numbers have gotten a little bit better. However, we don't have any wage inflation. The participation rate does not go higher. Some people do believe that that will continue to put a weight on wage inflation. So that said, that's the one thing that the Fed is trying to, or keeping a very, very close eye on, and will probably keep rates stunningly low until they see a magnificent turnaround in the overall jobs picture.
Okay, and we do get a read on growth coming from not only around the world, we'll talk about that later, but the U.S. this week. We get PMI read and also durable goods on Friday. So what are you expecting there, Larry?
I'm expecting more of the same, and that is we are growing. And numbers aren't great, but they're okay. And it might suggest, in my mind, that we might get one of those 3% GDP quarters coming up fairly soon. I mean, inventories are dropping, demand is rising. Overall, the last 6 to 8 numbers we've gotten have been really, really good, or at least have piggybacked on the narrative that we are growing. I mean, by no stretch have we achieved escape velocity in the economy, but we're heading in the right direction.
HSBC this week upgraded its GDP forecast for China to 7.5% from 7.4%, which really is bringing it in line with the official government forecast. What is your sense of China and how that's going now? What are your forecasts centering around?
Well, I've always been fairly bullish on China, and let's keep in mind that has been a bright spot most recently, especially when Europe has stagnated just a little bit. I mean, I do think their monetary policy has been and will continue to be fairly conservative. I mean, let's not make any mistake about it. I mean, they definitely have issues like all of us do with credit growth and et cetera. But I do think they're growing, but they're growing from a very, very high base. And I think that is what creates the volatility in the market. So I do believe 7.5% is basically achievable for China.
And this flash PMI, do you think it will be market moving likely this week coming from China?
You know, it could be if it's out of line, especially if it's out of line on the upside, because I think most people are still fairly, maybe not pessimistic, but neutral on China. So I think if we see a beat on the upside, I think we'll see a market turnaround. But keep in mind what happened last night or yesterday morning, your time, China, the Shanghai Composite was up 1% on the day, basically on a lot of vague generalities with regards to government lending money and et cetera, et cetera. So imagine if it beats on the upside.
Okay, we'll keep our eye on that. But Larry, just generally speaking, before we have to let you go, it's a short one today. It feels as if so much has happened. You know, we've got the downing of the MH17 over Ukraine, that crisis really coming to the fore again. We've got, you know, the whole situation in Gaza. So much has happened, but not much has changed when it's come to the market. What's going on?
Well, it's a great point, and I know I'm making a huge generality, but I really think the bottom line is we're in the middle of a business cycle, and yet geopolitics does play a huge role. However, I think business cycle always trumps what's going on in the world. I mean, the exception would be 1973 with the Israeli-Arab War, when oil embargo and prices quadrupled. But other than that, there are a lot of bad things going on around the world, but the business cycle is taking precedent over them.